He's too lazy.
I don't know, fucking use we did
There's
Drake's
one
house,
video,
and then
yeah.
one day DJ Khaled came down. He was like chatting with the builder there, and then my boss was saying that we were supposed to be doing his house like next, and that was like 2-3 years ago. Then that never happened.
It's annoying because like there's a video of him like in the on a jet ski, and then he looks so funny. He's like going like 60 miles per hour in this jet ski, and he looks like he's about to fall off the jet ski.
Yo, the man ran out of gas in the middle of the like ocean.
Yeah. Oh, he's just a fat guy, innit? And he's like, oh no, he acts like a child as well. He's like, still in the meeting. Like, shut up, just shut up. Like, there's no need for that. Like, I get you have money, I get it, and I get you're a busy person, but stop acting like a retard for your fucking fans to watch you. Like, imagine Drake being his friend. Like, who the fuck is this guy? Like, still in the meeting. Like,
we should probably leave the chat now, or for like the normal stuff now. It's 4:45.
No, okay, so yeah, I was just pointing out.
Yeah, no, sorry. Just to let you know.
Amin is here.
Hey, Dad.
Hey, Alan.
Thank you for getting me here, man. I didn't know how to do it.
Not a problem, Alan. How are you today?
We've definitely had better days, that's for sure. But okay, you know.
But
It's been a tough go, right?
Really tough. It's like loading up a fucking revolver and just spraying it over my screen.
Those numbers that are there, it says 31 and 99. Is that 31 people that are on here? 32?
I think people online in the chat.
Yeah, that's the amount of people connected right now.
Oh, okay, very good.
Can I
I think I actually see the last time we did this, I think was February 10th. Is that right?
Don't recall.
That's what I'm showing over here. I think that was I guess a little over 3 weeks ago.
Yes,
a lot has changed. Right. Hey, Carrie. A lot has happened in 3 weeks. God. A lot has happened in 3 weeks.
Yeah, it's been a
I
while.
don't know if Dorsh is Dorsh here?
He said he might be might not be able to make it. He said he's gonna try.
Oh, really? He usually texts me if that's the case, but okay. I guess I'll make a couple of comments, I guess, and then we'll just open up for discussion. Obviously, when we did this the last time, it turns out that the caution that we were all talking about was very, very much warranted, as it turns out, and a lot of stuff has happened since that point. And I guess majority of this focus probably will be on the OTC market, but there's clearly been a shift in the major markets from the ultra high growth stocks to more of the value type stocks, and we've seen the same thing happen. Obviously, get hit in the OTC markets as well, where and in the OTC markets more certainly with the market moving from growth to value, but also because we saw a lot of suspensions and a lot of people getting very worried about the very highly speculative stuff that people were doing. So not a surprise that we're seeing this, and I hope some were positioned well enough and took profits when necessary. We also stopped following that guy on Twitter right at the right time. After that last, he had one bad one and that was it. And we just stopped, and it turned out to be a good thing, I think. So, I mean, it's been a tough market for us all, I'm sure. And I wish I could say that it gets easier. Who knows? It's hard to say. What happens. I do think that the easy money that we talked about has been made already in the OTC and in the growth stocks, certainly in the large cap market. In the market, that easy money has been made, and it's going to get harder moving forward to do that. And a lot of times, I think in the OTC, when the markets pull in like this, it takes everything down with it, And then when all that is over and that period of selling is over, the better companies, whether it's in the regular market, large cap market, they rebound, like the Apples of the world, the Microsofts first, and likewise in the OTC markets, the better ones that have revenue, low amounts or no debt, and cash in the bank are the ones that rebound. And I think the other ones will be left behind this time. And traditionally, that's where a lot of people make mistakes, because they'll try to double down on things that they think are down for no reason, and they'll keep on going lower, especially where convertible debt's involved, because those guys are probably going to get very nervous right now and look to convert their debt into equity, try to get out, because that time horizon that they are viewing is tightening. So you need to be careful on that. I'll leave it at that and answer any questions.
Well, I'll ask a question. Speaking of the convertible debt then, and the companies that don't come back out of a downturn like this, I'm assuming that you think that Gaxi, that's not the case for Gaxi, and that we're in decent shape with regards to that kind of toxic debt and so on and so forth?
And you're talking about Galaxy in particular?
Yes, sir.
Yeah, Gaxi, in my opinion, had a press release already stating that the variable convertible debt is extinguished now, and that's a good thing. I see Gaxi as one of those that it had a major consolidation and I'm going to call it a correction, but a pretty big hit since the last earnings report, which hard to believe was only 12 business days ago. That's it. Stock was over 0.75, 7, certainly over 7, and has come back down into the just over 3 range. And I'm fairly certain there's been no T trades. There's been no reason to think there's been anything else. There's no variable convertible debt left. I just think that there's a lot of nervousness going on, and even in spite of a good announcement yesterday, we still saw some selling. I think when this all ends, this is one of the winners. That's my feeling. I have not changed my views on it. In fact, I'm probably more convicted. I have a higher conviction now today than I ever have on Galaxy. So I don't see it that way. I think there's a lot of the other ones that you can right there in the filings you can see. Once they get over a penny, those debt holders are going to try to convert and deposit their stock. So reading filings is really important right now.
Over the last few months, it seems that getting updated on filings are helping certain stocks go up. Do you think that will continue, or do you think it will end up just being the norm and it won't be a catalyst in the future?
That's a good question. I will tell you that this whole thing with Twitter and the updates on the filings and then people tweeting them out, we never saw that until like the last couple of months, where all these non-filers would start to update their filings, and with each filing, the stock would literally have all this buying coming in. And I'm not quite sure how that happened and where it started from, but it did. And I think because it did, other people just assumed that as more filings would come out, they should buy stock, and it became the norm. I think that those companies that have better balance sheets than others, that it will be comforting to see those filings go up rather. And for those that really have atrocious balance sheets, it won't matter. And I think maybe finally people will look at the filings, whereas opposed to just looking at one or two tweets from one or two people that are very persuasion. You have a lot of high persuasion, capability on Twitter. That's what I think. So I don't think it'll be like it was. That's why I said that easy money. I don't think it's going to be made anymore.
Thank you.
You're welcome. It's just by the way, it's just my opinion. You're wrong, certainly. But like if we take a look at the one that we talked about yesterday, GHAV, you saw the attorney put out Form 15, which was perfect thing to do, the right thing to do. It allows the company not have to file their SEC filings. And why would a company want to do that? It costs about $100,000 to $200,000 a year for a company to stay SEC compliant, to do its Ks and its Qs, and its audits and all those kind of things. It's relatively expensive. And so the first thing you want to see is a Form 15 if they're an SEC filer, and you want to make sure that they're going to update their filings. So, it gives you certainly a comfort level that they are. But like when this guy announced today that he was going to update his filings, the stock didn't move. So I think it may be just certain people on Twitter, had at the time the ability to persuade people to buy simply because of that. I just don't think it'll happen anymore. That's just my opinion. Though.
Can you explain what a Form 15 is? I know that question.
Yeah, Form 15. So a Form 15 is if a company is an SEC filer, so that means it puts out 8Ks, 10Ks, 10Qs, all the different filings that you would normally see, not the pink sheet OTCs where you see
unaudited.
Right, and unaudited results and things like that. If it's an SEC filer, the first thing they need to do, if they're doing it the right way, if they're an SEC filer and they don't want to be anymore, is to remove themselves from being an SEC filer. Their attorney needs to file a Form 15. You take a look at the OTC markets, for example, on GHAV, you'll see the Form 15, or at least you should. If it's not there now, it will be within 2 days because it should be 72 hours. And you'll understand better what the Form 15 does. But it alleviates a company from having to continue to file it under the SEC guidelines. And now it becomes an unaudited pink sheet, which the majority of the ones we talk about are.
Just to explain, on the Form 15, it's better if they're an SEC filer, but it's, they're still a good company if they're still, as long as they keep up with their regular filings.
Right, and really it comes down to, I think a company always wants to be an SEC filer if they can, but if they're going to run out of money, it may make sense for them to go right to the pink sheets. Now that said, one trick that's kind of done, you should be aware of from some of these SEC filers, if they are running out of money, some of the lenders who have convertible debt, they will put the money up for these guys to get current. And with the SEC, because they have an interest wanting to convert their debt to equity. So make sure you read the filings, even if they're an SEC filer. Because, I see that on a couple right now where I can see they have no cash. The only way they're going to be able to become, SEC filing is if somebody's loaning them money to do it. Most of the time, it's a convertible debt holder that's doing that. I know it from experience. I've been around to see it. I know others that would agree with me that have seen the same exact thing. So again, read those filings. It's really just because they're filing and become up to date. There could be another reason for that. So just be aware of it.
Sorry to jump in.
Anybody can jump in. Any question's a good question. We have 43 people here. Nobody has a question?
Come on, guys. I can't be
how's
the
Michelle
only
doing?
one.
Oh, thank you for asking. She's with her mom right now who's just waking up from surgery. She'll be okay, I think. Thank you very much.
Good.
It's been a bit of a disaster here, but thank you. I do miss Austin, but we're here in the warm weather at least. How do we become multimillionaires? What is that, millionaires? And so somebody just asked about GCAN. That one is mainly Darsh's. I think GCAN is a good example of a company that, the stock was moving fairly well over the last several weeks, and then it kind of pulled back with everything else right here. I think he's probably better suited to discuss upcoming catalysts. The thing there is, I think that there's the debt's been extinguished, but I think it's a victim of the market pulling in, the OTC's pulling in, and then other people just taking the profits if they can. Right now, it just got to kind of run its course. I know that this kind of stinks for me to say it this way, but that's the phase of the market we're in right now. And we saw that yesterday with Gaxi. To me, that was an excellent piece of news. It has been a while since we heard something like that. And there you saw, even on good news, there were sellers out there. So it doesn't surprise me. It'll end though. By the way, I mean, my feeling generally with this market is, we're just going through a period of time where we're seeing a lot of profits taken on a huge run. I mean, there's been a phenomenal run, both in the NASDAQ certainly and the OTC stocks. So it's not a surprise to see a consolidation here. And sometimes these go a lot further than you think they're going to. And you just have to be patient and pick your spots is the best thing that I can say. I see somebody asked about WNBD. I think I went over that a little bit, and I'd have to look at the filings on it again, and I'm happy to reprint that again. But in general, on the filings, what we look for, and we should all be looking for, are companies that, they've got some cash. They certainly have little or no debt, or the debt's certainly under control. And, they have revenue, and it's something real. We've seen a lot of, trips and dubs that have, kind of really had nothing behind it at all, and those have been suspended. So I think you got to be real careful about that. On the question of low debt, I think you have to look at the debt versus the revenue that's generated there. So when we look at a company like I know GV really well because I just met with that guy yesterday. I think it was yesterday. It might have been 2 days. It was 2 days ago, and so there he's got about $1.5 million of revenue, and fully out there around $200,000 in debt. I think that's reasonable. I think that there's a lot of companies that have, where you have, probably a lot more convertible debt out there than there is revenue. That's not good when you see that. And obviously, the higher the stock goes, the less dilution it's going to be, because any conversions that are done right now would be done at a higher price. So, that probably has something to do with what you're going to see going forward. But that said, just because it has convertible debt does not necessarily mean that convertible debt will hit the market. It's a little bit of an interesting scenario, and I know others on here understand this. Even if you're a pretty big convertible debt lender or an individual that has convertible debt, it is very difficult to clear stock these days. Very difficult. It's not the way it was back in 2014 through 2017 and 18, where it literally could be done in a day or two. And even if you get it in, there are volume restrictions on how much can be sold each day, and it's not as easy as it used to be for those folks to do that. So that all has to be taken into account. And a lot of us know a lot of the debt holders that are out there. For example, a very big one is Level Up, a group out of Long Island, Great Neck, Long Island, that most of us have known for many, many years. Hello, Darsh, I see you just came on. And when I see them in a deal and they have convertible debt, I know they'll be able to convert their debt, and I know they're going to hurt the stock. So, it's one of those things that experience kind of teaches you the guys you can work with. I can list several, that if you see in there, Green Tree Financial is another one. You see them in a deal, you want to be careful. Level Up is another one you want to be careful of. There's several there. Union Capital, we know them well. I know Sarge and I know them very well. And if you see them in there, they're not afraid to go in and just slam the stock. They're just not afraid to do that. So you kind of need to know who's in there if you're looking at one of the picks that you have. Hey, Doris, some folks asked about your marijuana company there, GCAN, and I just commented that I thought it was just a victim of the overall OTC coming down right now. Some asked about some catalyst that might be coming, and I don't know if you want to make comments on that, because you certainly know it better than I do.
Yeah, no, for sure. I mean, everything was down, right? No matter what the stock was. I'm not sure, if people follow other markets or anything like that. That's what I was actually busy with. I actually had some broker issues in other markets. But regardless, I mean, as far as GCAN goes, I think it's just with the overall market, names are just down. Like, there's nothing else. And the other big thing is, I mean, anybody that has a position, looking at everything, the way things are going, people are just selling, right? People are just taking their money out. And that's what we're seeing. But I mean, GCAN, it doesn't have any convertible debt, which is a great thing, because, a lot of the names that do, they've been crushed, a lot worse than what GCAN. And GCAN has actually held up very well. Today is the first day that we saw, much more of a down day than before. But let's see. I mean, March is going to be a very interesting month, and I'm kind of on the sidelines, just managing everything that I have in the OTC. I'm very active in other markets right now, just because OTC is a space that just needs some time to cool off right now. With the whole SEC thing and things like that, it just does not make sense for me to get into new positions, my money up for no reason, right? Because nothing is moving. So that being said, GCAN will be fine. It's just the environment that we're going through. I mean, look at Galaxy, for example. Yesterday, they had a great catalyst. What happened? Nothing, right? Could not hold. So there's your prime example, right? And sort of the similar thing. And as far as the catalyst goes in GCAN, I'm sure they'll put something out, but more than likely they'll wait for everything that's going for the dust to settle before they do anything.
Yeah, I agree with that. Actually, the stock's down to really where I know I entered it originally. I'm interested in looking at it again now to enter again. It's just no surprise. I mean, these kind of fell back to where they were. Somebody just put up a graph, by the way. So when it comes to charts on the OTC, I think they can be useful if there's no dilution. And I know a lot of people would disagree with me on this. I find it really hard to look at charts on OTCs if there's a dilution in the stock, because if that comes, the charts are blown up in a second. Yeah, there's support on the chart you're showing. There's no question about that on ENZC. The problem is if there's a convertible out there and somebody's going to go convert, it's going to blow up the chart in a second. I think that's far more important. And the chart kind of holds until it doesn't, if you know what I mean. So I tend not to look at those. I think for large caps, certainly in terms of entering the stock, and Darsh, you can comment on this as well. I think charts certainly are very useful for looking at the 50 and 200-day moving averages and where you might want to enter a stock. I know I was talking to one of the guys on here today about Qualcomm. There it is, perfect example. And that's why I was talking about it this morning. And I was saying we thought that below 130s was going to be a good area to enter the stock. You can see it's kind of the peak on where the stock was several months ago last summer. I think it is. I can't see specifically there. And it's going to turn out that he's precisely correct, it looks like right here. And hopefully it'll hold that 200-day moving average, but these have kind of fallen apart. And on a technical basis, right now, that chart, if you look at it, no one's going to touch that stock until it finds some kind of support right in there. I mean, if you're a long-term investor, you buy it and hold your nose. But right now, you're basically just catching a fallen knife right now. So that's my feeling. And I think he's right. Somewhere in the around 130 mark is an incredibly great price for a company trading at 15 times. Yeah, look, it's trading at 15 times forward earnings with a 2% dividend right now. That's the kind of stock I think the market wants, but that's a large cap. I think you can use the charts on that one. That's my feeling. Somebody asked above estimated time on ICU business plan. I think you'll see something in 2 to 3 weeks. But again, because the market's kind of pulled in here a little bit, the CEO may decide to hold up a little bit and just let things settle. Hopefully, in this day and age, everything happens so fast, I mean, the market's correct in literally 2 or 3 days these days. It used to take months, years ago. Now it's taken a couple of days. It's hard to say. 3 weeks ago when we had this conversation, Darsh, I'm sure you remember, we were very cautious. I just looked at it. It was only it was only February 10th, which was what, like maybe 17, 18 trading days ago? It wasn't really that long ago. And we were extremely cautious, but yet everything was booming at the time. I'm sure every one of us wishes at that time that we literally sold everything. So things change very, very rapidly.
Hey, Alan, and Goldman, and maybe some of the other professional traders. This question, I guess, is coming from me, who's historically been a passive investor, not a professional trader. And I'm curious if you had any thoughts in terms of your own personal trading behavior, and if that shifts and how it shifts when we get into kind of a market correction cycle. In passive investing world, I mean, you're thinking about in terms of opportunities with rebalancing and things like that when we enter into different cycles. I'm just curious, like, do you find yourself, for example, does your volume of trading tend to go up where you're looking for smaller wins? You're making more trades during these cycles, looking for things. Do you tend to take a more, passive posture during these times? Any thoughts there, just from a purely trading perspective?
I'll start out by saying that when we talked about this 3.5 weeks ago, we were talking about getting cautious. That's the time that I was already, and taking things off the table, right? And especially in the very, very aggressive stuff, which is kind of why, if you saw on here, as ICBU was moving up higher, and I know we talked about it, I was like, don't be afraid to take a profit. Don't be afraid to take a profit. It's the way the way the market felt. It feels risk off right now, right? So on days like that we've had more recently, I'm not doing anything.
Yeah.
So I just pull back and kind of wait on the long side, right? I don't do anything, and I'm kind of looking at the large caps right now. I think we were super aggressive. All of us were back in December. I mean, my God,
right.
from Thanksgiving through, like, let's say February 1st, it was insanity. It was just every day, people posting their accounts on Twitter of $1 million. I've never seen anything like it. And many of us who've been around for years were talking about just that thing, saying that's the sign of a top. And, turns out it looks like intermediate wise, we were right. So on days like this, and I think Darsh mentioned it before, he's looking more at the larger stocks right now and staying away from the more aggressive things. I just don't see right now the momentum of buying. And Gaxi was a great example yesterday. People sold in that news rather than, although they bought it for the first half hour, but that was fairly, that was interesting to see. Now that's going to change. My guess is it changes fairly quickly, but right now, for me, it's somewhat risk off on trading. Darsh?
Yeah, no, for sure. Those are great points. And I think this is a good question. And, there's no concrete this or that type of answer to this. It really depends. I mean, what CC just said, that's kind of what works for him. I mean, for me personally, OTC, yes, I trade it. But, the other markets that I trade, I trade the ES futures every day, right? Right now I'm active in, SPY options. I'm active in Tesla options. I'm trading a whole bunch of stuff. I have much more complex stuff that I do outside of, OTC. So that's what I'm, focusing on right now is, that's where the opportunities are right now. And those are the markets that I'm in right now. And in the meantime, waiting to see how things shape up in the OTC space. But I mean, times like these, I'm just on the sidelines. I'm not doing anything. And if anything, when we said, it's just be careful, right? Especially when SEC started suspending anything that's not, up to date on filings, stuff like that. What I actually ended up doing, I actually told, Alan what I was doing. Any name that I had in my book that had a stop sign, I literally sold it. And it was great because there were huge bids to sell into, which was kind of surprising. I mean, PTTN, I mean, SUTI, there's another one, PLYZ. It's just not worth the risk. I mean, there's only two ways about it. You're either early doing it or you're the last guy that does it. And no matter which route you go, both of them suck. But the earlier you do it, the better it is, rather than you wait for it to get to a point where you're forced out of it. So yeah, I mean, right now OTC, I'm mainly any other positions that I have, I'm just I'm keeping those because they're fine. There's not much going on there. But anything new, I'm just on the sidelines, just watching, see how things go, see how the next little bit is, and then take it step by step from there.
Whoever stock it is asked a pretty good question on here. So, if you look at the OTC market in general, I'll bet you that 5% of the days of trading in the year, maybe even less, are the days where 90% of the gains are made. Okay, like on ICBU is a good example. The stock had a huge run, and when you start to realize that, I think that this is why, I know I kept on putting on there, don't be afraid to take some profit, take it off the table, because there's so few days that you get like that. I almost feel like you have to sell some, even though you may not want to. But I will tell you, as I discussed with one person who I think did it the right way on here, that, they held on to, let's say, 25% of what they own. They had sold, 50% one day and then another 50% the next day. So they ended up selling 75%. But they felt good because they booked a profit. They still had some. So if it went up, they still felt okay. But if it went down, they wouldn't feel terrible. So I think in general, if you're asking about the new people, just learn from what happened there. Okay, the OTC, it makes no sense. There is no rationalization for why the valuations on some of these stocks are the way they are. Just understand that when they run like they do, that's your opportunity for liquidity and to sell some when the stocks do that, because it doesn't do it that often. You have to take that opportunity along the way. And I'll bet you 99 times out of 100, you're going to end up doing it the right way. Personally, what I do is if I see a stock running like that, I did it with CLIS. And I know Sarge knows this well. When the stock went from like 10 to 20 in one day, 50% right off the table for me at the open, and that gap up by 100%. That was a no-brainer. The next day, another 50. I mean, it just and so I ended up. I think I had, I don't know what it was. Let's say it was 500,000 shares. I'm left with 10,000 shares now. But it turns out that my average price of selling was at a much better price. I think you have to realize in the OTC, there's maybe 5% of the days where you're going to get that opportunity. That's going to happen, and you have to take it. It's not like Apple Computer, which can be up, 200 days out of the 280 trading days of the year or something like that.
Can I make a quick comment here on the on that ICBU trade there? I'm not telling anyone they should sell their stock, buy more stock, anything. I'm just making a suggestion. Go back and look at the filings for the past 5 years, 7 years, 10 years. It doesn't matter. Just go back and then look at the charts. See what the company did in between all of that, and I'll guarantee you, your thought process will be, I need to take money off the table. I mean,
I think he's right. Now, when they run, there's no question. And here's the thing: companies can come out even with great news, right? After that all happens, and if the stocks don't go up, then you have a problem, right? Or at least you think it's great news. Most of these are all bought on hype and hope. So, I think that the plan that the ICBU CEO has is good. We'll see. But he's also had many plans over the last 10 years that someone who just spoke and I know about. And there are times where the stock has moved very well and sometimes where nothing's happened. So I think that's very prescient what he just said. I agree.
And so, guys, I actually have to hop off, but before I do so, I'll just give some final thoughts. It's funny we're seeing all of everything that's going on in the markets. Just on Monday, if you looked at the markets, who would have thought on Wednesday would be down where we are today, right? But it is what it is. But on the other hand, the big thing right now is, a lot of the stuff, and I'm not talking OTC, I'm talking overall markets. A lot of the things that are driving this is flows. SPX roll is around the corner. There's dealer flows and stuff like that. That's really driving what's going on. We have these sharp up moves, sharp down moves. And this is actually a window, even heading into kind of end of March, start of April, where time is on the side of bulls basically. If anything, we will see a move up. When, I don't know. I mean, we have Fed coming up this month. There's a bunch of other catalysts. So I do see a window where the bulls are gonna get their one last shot. When it's gonna be, how long it's gonna last, I don't know. But going into April, May, I would definitely be very careful, because that's a period of weakness we'll see. And if you thought this was pain, you're not gonna like what you may see in those months. So that's where I'll leave it off. If you guys have any other questions, I mean, just shoot them in the chat, and once I do get some time, I'll definitely take a look. I'll be more than happy to answer.
Thanks, Darsh.
No worries.
Good talking to you, Darsh. We'll talk later.
All right, talk later.
I just want I'll make one other commentary on the overall market. What you're seeing is a transition in the overall market. This is not the beginning of a bear market, in my opinion, or anything like that. We have, obviously with the vaccines that are out here now in the United States coming, and clearly by the end of May, everybody will be able to have one. And the fact that interest rates are moving higher because, the government is basically paying people, and there's going to be a large influx of money. You're seeing interest rates move up. There's just a repricing that's really going on in the overall market. On the NASDAQ, by the way, I personally only see really limited downside. I'll tell you that everybody always comments, and if you listen to the talking heads on whether it's Bloomberg or CNBC or Fox Business, wherever you watch, they'll always bring on the doomsayer of the day, right? Say, oh my God, everything's horrible, it's terrible. You got to sell all your tech and all this, but they always come back to growth stocks eventually. And these go through very, very fast corrections. And you're seeing that in the NASDAQ now, and it feels horrible as it's happening. But boy, if you buy quality stocks when that happens and you hold them, a year from now, you'll be damn happy you did. So that's my comment overall on that. So somebody else had the question on why we saw the selling into great news yesterday on Gaxi. I don't think that was a reflection on news. And I don't think it was a reflection on Gaxi as a company. I think that it was a reflection on what we're seeing in the OTC right now. And that is that there's an opportunity to sell anything at a profit, or to create capital somewhere, because they're scared people are taking that opportunity to do it. I wouldn't look at that as somebody looking at that news and saying, I'm going to sell into that, because otherwise in the first 5 minutes, you would have seen the stock go down. It didn't do that. It actually went up 30%. And it's trading quite well. And then I just think that the overall OTC just looks so horrible. People took money off the table. That's my feeling. I think, like I said, and I've stated on here many times before, companies like Galaxy and KULR, and the ones that I follow, at least AFFU and others that are companies with real solid business plans, good quality management, a vision, little or no debt, revenues that are working, cash in the bank, they will come back. It's just painful going through this consolidation period right now. So that's my view on what happened with Gaxi. I would not look at that as people sold that quote on the news. I think it was just a bad OTC market. And because of that, you just saw selling. And then once it started, people said, oh, there must be something wrong. I'm not going to buy, which is typical in this market. So that's and again, this is just my personal opinion. Real quickly, I see somebody asked about TQLB. I think TQLB is in that typical company that, again, if you look at it, the share structure looks great. The company wants to do a Reg A offering at a much higher price than it is right now. There's going to be an incentive for them to move that stock higher. There's really no stock in the way. Again, we're just in a tough OTC market, and it's the kind of security which makes sense to me when things start to come back. And those are the kind of things, at least, that I know I'm looking at in the OTC. I still own it, still have it, and just wait for this market to rebound. And if it goes down far enough, I'll add more. Any other questions? Feel free to just keep on throwing them in. I think this is Ed.
Yeah, I was just going to ask. Could you make sure you check your messages afterwards, because I've got like a It's quite an interesting conversation that I think you might want to have with me if you could just look at your messages afterwards.
Of course, no problem.
What?
There was somebody else that wanted to ask something here.
Hey, it's Pam. I have a quick question.
Hey, Pam.
I saw something and I didn't verify it. I saw something on Twitter about debt selling and that there's a new rule in the OTC that debt sellers now have a 6-month waiting period from the time that that company takes the agreement. They have 6 months before they can start selling.
Okay, so let me explain. So when a company takes on convertible debt from a lender, the lender typically uses the SEC rule called 144, and Rule 144 it actually can be used, and it can either be 6 months, 12 months, or 24 months, depending upon a couple of issues. If the company is an SEC filer, the holding period is only 6 months. So even if the convertible note is dated, and let's say it's got a 2-year duration on it, after 6 months, if it's an SEC filer, if the lender wants, they can start to convert that debt into equity. So they do not have to wait until the termination of the note or until it expires, until it matures. They can convert it during after the first 6 months. After the 6-month period is over, if they're not an SEC filer and they're a pink sheet, I believe it's only a 1-year holding period, although I see Sarge is saying not correct, so he'll probably call me and text me something, which I hope he does. If it's a pink sheet, which is not a non-SEC filer, the holding period it should be 1 year. And then if it's a pink sheet and considered a shell, that's a 2-year hold. So I believe that those are that's correct. Tacking period. Okay, I got it. So maybe talk about it. On the issue of just the issuing of debt and using Rule 144, I think what I said is accurate. But what you may be asking is, if there's a piece of debt that is out there and a third party comes in and buys that debt from that party, there's a new tacking period that starts on right now. I believe that might be what you're talking about. So if somebody comes in and purchases, let's say I come in and purchase that debt from Level Up, I have to wait either 6 months if it's an SEC filer or 12 months if it's a pink sheet. I can convert that debt. So I can't immediately do it. I have to wait all over again. I think that's what that's what. In fact, if the Sarge wants to come on and explain it better than I did, he's welcome to do so. He tends to know the rules a little bit better than I do. But I think those are the rules. Is that what you were asking, Pam, about the tacking period, or about in general?
It sounded like the Rule 144 that you were saying, but it's something that's new for 2021. So.
Oh, okay. No, that I believe that is the tacking. The new rules for that. Do you want to come on there, Sarge, and talk about this?
Looks like he's typing a paragraph.
All right, that's fine. He's really good at this. There is definitely a new rule that the SEC, I think it starts later. It may have started. It started already, actually, and I think it has to do with when a third party buys debt from an existing debt holder. Here it is.
I saw it on weekend, so I'm assuming it acted this month, possibly. I don't know.
Okay, I think that what's good is if okay, all right, it's not passed it yet. So I think this is what we're talking about. So it's not currently passed yet, but Pam, I think that offline probably you and him can have this discussion, and it's probably something good to pass on. I'll talk to him about it also, and we'll make it real clear in a statement to everybody what's going on here. But obviously, convertible debt to these stocks is really important if you're going to decide to trade it or invest in it. Very important. As other people have come on and said, probably the most important thing. It's one of the first things I look at. And there you go. See what he just said there? Everyone is converting now. That's one of the reasons you're starting to see some of these stocks pull in a big way. And again, where the big mistake that we all made, and there are those on this call that know this, back in 2014, 2015, is the convertible debt just did not stop hitting the market. It's all toxic. It'll all be converted all the way down. And, just
I
because the
wasn't
stock,
toxic.
sorry,
I wasn't toxic.
you know what I mean. but I mean, there's a couple of debt holders that are trying to get out at the same time. They're going to just hurt the stock. And that's the thing why a lot of us are sitting on the sidelines right now, is to see. Plus, a lot of the filings haven't come out yet for the start of this year yet on the OTC. Majority of them haven't. They have to the end of this month, and then a 15-day waiting period if they ask for an extension. The convertible debt blows. I agree. So, the other question, the OTC market will come back to some degree. It's just, I think the better stocks, the ones that we talked about, a Gaxi, a KULR, a GCAN, those are better run companies that have revenue and, little or no debt, cash in the bank. They'll come back. It's just they're all being smacked down right now with everything else. So, and certainly those suspensions really hurt.
Are those tickers you just mentioned, are they all listed somewhere, like, for example, at Common Sense Alerts?
Well, I'm sorry. Is what? Oh, the tickers?
Yes,
No, I don't even
tickers.
go in there. But like, I'll tell you, if you follow the things that they're all basically the same situation. I'll throw up a bunch of tickers for you later. It's and listen, I think some other people on here have thrown out some really great ideas lately. It's nice to see that the things that people are looking for are consistent in that they're now looking for things that have cash in the bank and little or no debt, business plans, good management, and stuff like that. There's been some really nice. I saw one today that I thought looked great. That was like a 25-30 cent stock, and it's good to see. So I think those, we'll post those if you'd like. And remember, a lot of those, how long have people been in GAXY? Probably a very long time. I think a lot of those, they take a while to pan out. For me, stocks like AFFU, it's taking a long time, but I'm willing to wait. I think the future's fabulous. The future in KULR, in my opinion, is fabulous. I'm happy to wait, although, I think we talked about that at 90 cents to $1 in here. And just continue to see a very bright future. So the majority of the ones that we talk about, the recent one, GHAV, I think it's a 50-cent number, at least. At some point, I just don't know when. And I can't predict it. If somebody had told me, by the way, and I know Sarge knows this well, that CLIS would have gone from 2 cents to 50 cents in about 2 weeks, I would have said they're crazy, but it happened. And of course, when we got there and we started to see that it was, extremely oversold, that was a great time to sell the stock. Hopefully that happens to some of these. Hopefully it happens, especially the lower float ones. Good. As somebody just asked here, if there is one stock you're passionate about and done thorough due diligence on, as rule of thumb, what's the max of your portfolio that you had just been holding? I think it depends upon the size. I've heard guys like Jim Cramer come on TV and say you don't need more than 4 or 5 stocks in your whole portfolio. Personally, I think that's small, unless you have mutual funds in there also. But for me, it's probably, I don't know. Gaxi is probably the biggest position I have, and it's like 10% of what I have. Give you some idea. All right. And that'll vary. It can go from 5, could be as high as 15 or 20%. That's just giving you some idea about what I think. But I do think that you need to realize that the OTC is like the Wild West. It's like going to Atlantic City or Las Vegas. That even the ones that we think are really good are still nothing compared to the quality stocks on New York Stock Exchange and the NASDAQ. So you got to think of how you want to balance that. And even if you start to dollar cost average into some quality ETFs, I know I've thrown some up there, some mutual funds. I think it makes an awful lot of sense to have that while you're here. So on days like this, you own a stock like Boeing, or IBM, believe it or not, or General Motors, which has a good day, a day that's horrible for all these other growth stocks.
Actually, they didn't have that great of a day, but GE did.
Boeing did. IBM did. I know. Did I miss the GM didn't? Okay. It's still though the stocks acted really well and it's in a good position. You know what I'm talking about. The banks have had good days lately. The whole world hated the banks 6 months ago. Now everybody's rushing into them. You know?
Careful
And
on the
rushing-
banks because they're only going up because the interest rates are going up. Once the interest rates start cooling down, they're going to start dropping again.
And I will also say that, you know, if you look at the charts right now on the NASDAQ, and we talked about this as you just Qualcomm at 128 is a great buy. They're all extremely oversold short term, very oversold. And you know, the NASDAQ itself, there's some pretty good people that I know I follow. There's like maybe 2 or 3% more left here. There's always people looking around their shoulders thinking, when on earth can I run back into these growth names? They're not going to stop growing. I mean, look, maybe there's an interest rate adjustment, but this economy, if this goes like the way people think, those growth numbers, the earnings and the revenue increases are going to be mind-boggling. Stocks that are getting slammed right now. You know, they're going to be 100% year over year. Some of them, and they've been going down 20-25%. Somebody just wrote about Cooler at 242. You bought hoping for threes again. You know, we hear you. I think that you know, for those that follow the EV space, the battery space, can see what the company does. Saw what the Fox interview was a couple of days ago on TV. You know that he had material that was actually on the rover, the lunar rover that went on Mars. I think our goals are significantly higher for the company than $3. Okay, you know, it's hard to put a price target on it. You know, for those of us who, for example, bought MOGO back when it was $1.30, you know, what, 6 or 7 months ago, you know, I think that all of us would have been happy at 5, and all of us would have been happy at 10. You know, I don't know where it goes to eventually. You know, I look at valuations. I saw a recent price target on that one of 16 now by H.C. Wainwright. I think it's hard to put targets on companies like KULR that's just in its, you know, emerging growth phase right now. It really is. I mean, the stock go to 100. Who knows? You know, so certainly 3 if you're a trader and you're looking to get out next week, hopefully. But in my view, I look at KULR and I'm hoping for something that's a wealth maker, something that allows me to retire, something that you know, we can smile about remembering when it was $1 or 2 or 3. That's my hope on a company like that.
I have a question. Pam again.
Yes, Pam.
I may have missed it because I may have been on the phone. Did you guys cover the different stipulations that a pink stock could be suspended other than like Twitter or false press releases if they're current? So like, what are the dangers?
Right,
if everything you see makes sense, but then all of a sudden it doesn't, it's suspended.
Right, like COUV. That's a really good point. And that's another one that went from basically 1 cent to 40 cents. It seemed like in 2 weeks. And I think it did happen in 2 or 3 weeks. But, yeah, so the SEC, look, they've never been a fan of the unregistered securities market, the OTCs, never. And I think that you know, I think that you know, you need to realize that. So if they're given a reason to suspend the stock, my rule is that they will. And you know, obviously the filings are an obvious one, because if they're not up to date on filings, or you find out the CEO is dead, like on SCIE, that somebody pumped like crazy on Twitter, as you know, that's going to be an issue. But if there's a false or misleading press release, that is absolutely a very reasonable rationale for a company to be suspended. And I believe that's what COUV did, and they were questioned about it. And you know, when you're gray sheeted and you're delisted, it is very difficult to come back listed again. You have to go through a lengthy, expensive process and get a market maker to come in and sponsor you. And it's not pretty, and it takes a long time. Most people just give up and let it go. So you don't want to see that happen. But right now, in terms of your stock selection in the OTCs, you know, if you're picking something that doesn't have, like, you know, the only reason that I said I was going to buy GHAV, which I did, is because, we saw that Form 15. I spoke to the corporate attorney, spoke to that CEO, and they said we are filing literally within days. And once we got that, then I'm fine with that, and I don't think we'll see any false or misleading press releases. But if you suspect one is out there, and be really, really careful. I will also tell you this, and I know that Sarge knows this very well. I was involved in a company 4 or 5 years ago, I think it was, and I knew the CEO of the company. It's actually a friend of mine. And all of a sudden, one day, there's a press release that comes out. Okay? He didn't write it. We have no idea who wrote it, and it came out. So stuff like that happens. We had to notify and literally come out with a release immediately. He did, stating, we don't know who did this. It was not meant by the company. In fact, I think, if I'm not mistaken, I just saw, didn't that company, what's the company with like 300 billion shares outstanding right now? What's that ticker?
HBMC or something?
Right, whatever.
HCMC.
HCMC, there it is. I think they just put out a tweet yesterday stating that there's a false Twitter account, right? And stuff like that. So you have to be really careful. And when you see stuff like that, somebody is just trying to, that's a scam. Somebody's trying to sell stock. And that is a huge red flag. Huge red flag. And even if the company didn't do it, the fact that somebody else is, that they're just looking for liquidity to sell. And that's, you really have to think about why you'd want to own it, have it still, or buy it if you haven't. And that is an obscene amount of stock. I've never seen. Hey, if you don't mind, to some of my friends who have been on for a long time with me, have you ever seen a stock with that many shares outstanding? Ever?
That is the most grotesque amount of shares I've ever seen. I seen the way, and it was amazing to me because I was actually sat there mesmerized by watching it trade, and it's trading, 700 million shares at the offer and 800 million shares at the bid. I've never seen anything.
I've never seen anything like that in my life.
They also had shares last night, and it still went up today.
I know, and listen, I've made remember, it didn't matter what the price was. I basically said the same thing throughout, and I think you're hearing it from others on here too. There's also $250 million of convertible notes in that deal. Okay, so that's the reason why there's 300 billion shares authorized.
I mean, I hope anyone that's in that stock made money. I got to be honest, because the only thing I see in that stock is it's going to basically to no bid. I mean, right. I understand it went today, but woof.
I agree with you. I think there's a day where it'll be no bid. That's what I think. If it's not, I'd be shocked, absolutely shocked.
So I think that's. My name's Luke, by the way. I think that's one of the interesting things. I'm relatively new in the OTC, so I don't have much experience in OTC whatsoever, but I've worked in the business valuation space a little bit. And I think that the crazy thing about these OTCs is when you try to look at valuation, I mean,
you can.
It's more of a, okay, does this feel reasonable? You can't really look at it with any kind of methodology and say, oh yeah, that's the right valuation for this company, because so they're all bloated. And so, obviously the ones like HCMC and I can't remember that other one, TSMP or whatever that one was. I mean, that's just ridiculous. And so at that point you're like, well, okay, that's a time bomb waiting to happen. But yeah, I don't know. For me, this isn't really a question. I guess more of a just comment. It's just looking at it and saying,
you're right.
Does this look risk reasonable? Versus reward.
Exactly. You are preaching to the choir, Luke. Just so you understand, you really are. And
yeah,
that's the thing I think. But you also get it, and that is that because of that, the OTC. And listen, here's the funny thing. People always talk about, oh, these are being shorted. That's why they're coming down. No, they're not. OTCs don't get shorted. Period. I don't want to hear it. If somebody says that, it's because there's a debt seller in the stock. The real reason that they can go to those valuations is because they can't be shorted. Okay?
Right.
Because if they could be, you'd have pros in there shorting these things a long, long time ago. So it's kind of funny that you always hear that out there. that Luke, you're making a fabulous point. That's the reason these can go to such ridiculous numbers, and why, if you kind of get the mentality of the OTC, you can do well. And that's kind of what we are trying to do in this room. Look, this is not a science, it's an art, right? And it goes by feel. And some of us who have been around for a long time doing this, and if you remember, I think we said we would do like the Alex pick until it stopped working. And then literally one day it didn't work and we said, that's it. And that turned out to be the top of the market, right? That was kind of a feel, more of an art. And I think that, you're right on some of these. So I always do look at valuations. I look at KULR, for example. That's one of the few. In my opinion, Luke, there's a couple that are out there. KULR being one, AFFU being another, because I'm very up to date on kind of what their business model is. I can do a valuation analysis on things like that, but they are seriously 1 out of 100. So you're right about that. The majority of them make no sense. But if you kind of know that and you kind of follow the momentum, that's why I was saying, when you see a stock up like 100%, 200, 300%, 400, like ICBU ran from 002 to over a penny in 2 or 3 days, those kind of days, I'm like itching to pull 50% off, right? You just kind of feel like that's what you have to do, because it becomes, as you said, Luke, unreasonable. And you're right. You're right. Now you do get the few like the S&P, and look, there's a lot of people who own that are in this room. And in fact, I think the gentleman who put together this whole entire board is a big advocate of it. For somebody like me and you, Luke, and for the other gentleman on the phone, and for Sarge, we look at that and we say, how on earth could this have a $5 billion market valuation, right? I have no idea how they got it there. I really don't. But it just, so somehow it was done. Somehow they were able to motivate that much interest. Obviously, people are not looking at the valuations when they're buying these, right? So it goes. That's why I said it goes more by an art than it is a science. But the few that are out there that are going to be successful, like a couple of the tickers that we did talk about, I think that they're probably 1 out of 100, and those are hopefully some of the ones that we find, and that's really also part of the goal of what we're trying to do in there.
Well, to your point, though, I mean, the fact that there is no possibility of shorting any of these stocks, I mean, to me, that just seems like, well, there's the advantage of the OTC, one less variable that you have to kind of factor in. I mean, there's going to be sellers, that, but those are a bit easier to spot and see those trends than, at least to me, than the short.
You've got it. And listen, this discussion regarding the inability to short the OTC is one that's never had. And that is the reason why these things go to crazy valuations, and it's funny when I ever see people, the shorts are shorting, a stock from 1 cent down to 005. No, they're not. It's not happening. If anybody had any idea, and Luke, it sounds like you probably do, I know some of the other people do, what the capital requirements are for an individual or a company to be able to do that short, that's even if it was allowed on the OTC, it's ridiculous. It's economically unfeasible to even think about doing.
Yeah.
So I always laugh at that.
Can you please elaborate on shorting? Like, what does shorting mean? Like when you say,
all right. So I'll give a basic and feel free, Luke, and if you want to speak in, but we'll talk about shorting really of a listed security. So what can happen is that if similar to when you buy a stock that you'd like it to go higher and you want to buy it low and sell it high, this is kind of in reverse, where you think a company is overvalued. And by shorting a stock, you're actually borrowing the security from somebody who owns it, and you're selling it. You're selling it today. With the idea that hopefully you're going to buy back the stock at a time in the future at a lower price to close out your short position. So it's the opposite of when you buy and then you sell. This way you're selling by borrowing the stock, and by borrowing it, you have a carrying cost of the borrowing amount on that stock. So let's say you borrow $10,000 worth of stock. Whatever firm you're borrowing that stock from, if you're at E-Trade, for example, they're going to charge you whatever the borrowing rate is for that stock during the time that you've shorted that. You have the carrying cost of the short position because you're borrowing that stock, at which time you cover that short by buying the stock back in the open market. So that's effectively what shorting a stock is. Now, what you saw happen on stocks like GameStop, as a stock starts to catapult higher, the brokerage firm has the authority to be able to call that loan back effectively. Remember, you borrowed the stock, so it's really a loan. And if they call it back, it means you are forced to cover the stock in the market. And that's when you hear somebody talk about a short squeeze. It's brokerage firms telling the people that they have to have their stock back. And the only way that they can do that is to buy it in the open market, and it creates an avalanche of buyers. That's what a lot of the Reddit people were looking for in a GameStop or some of those other ones, high short positions, because they created a short squeeze by forcing those coming back because the buying pressure was so great. Does that help?
Question in regards to shorting.
Yes, it did. Sorry, I was
Okay.
I'm on mute, so I had to mute. But thank you so much for explaining. I got it now. Thanks a lot.
Right, and I know you were just talking about Neo. Neo probably is a combination of short sellers and just people who think the EV market's overpriced. Plus the chart right now, we looked at the chart yesterday. It has room to move down to the 200-day moving average, which is lower than where it is right now. So you have a lot of things working against that one right now. Long term, Neo seems like a fabulous company.
Pam here. I have a question about shorting that I heard from a friend. So this could just be hearsay, but he told me you can short in the OTC market, but anything under like $1 to $2, you pay $2 per share, which is what doesn't make it ideal. Is that another contingency that would prevent?
So I'm unaware, and maybe Luke or Jim or Sarge can jump in. I'm unaware of any U.S. brokerage firm that will allow you to short an OTC stock. Okay, I've been told it can be done overseas.
There was a
European net capital.
There was a European.
Sorry?
There was a European firm that actually did allow years ago of shorting OTC stocks, and yes, it had to be over a certain dollar amount. But I don't.
Yeah, you probably did have to put up a certain amount of money, though, Pam.
A lot.
So if that were the case, I just don't think that it's. Let's put it this way: I can't imagine it's being that it's happening now. I just don't think it is. I mean, right, Jim? You think, or Luke, or Sarge? I can't imagine that it's going on right now at all. I mean, that's why a stock like, and again, with all due respect to the people who own TSMP, that's why it can get up to a $5 billion valuation. If that was on the NASDAQ, there would have been tremendous shorting at a $5 billion valuation. This isn't. So if you can't short some.
I don't know if it's possible through a loophole or through a specific scenario, but I could probably say that it's probably not significant or widespread enough, if it is, to really affect a lot of these tickers meaningfully.
All right, what the person just wrote up there is probably for a NASDAQ stock or a New York Stock Exchange stock. It may be the case. I can tell you that I've looked to try to short, and we've talked about this before, some NASDAQ stocks that have been $2 and $3. But again, I will tell you, even on E-Trade, the carrying cost to short them is so economically unfeasible. Even for those stocks, it makes it hard. I know, for example, I was trying to short, or was looking into shorting a $3 number that I thought was worthless, and it was 90% to hold it on the borrowing cost. I say, what is it? It's crazy. I'm not going to do that.
That's
so I just don't.
Stock.
Right. So I don't, and I don't think, and on the OTC, certainly, if you go to E-Trade to try to, they'll say it's not available. You can't do it. I just don't think, I don't think it's done. And I think way too much is in fact, it's the opposite, as Luke and I and Jim and Sarge are talking about here. The reason these can go to such incredibly high numbers valuation-wise is because you can't short them, not because you can. So the reason they're going down is usually because there's convertible debt in the deal. And the people that are screaming shorts are probably the ones selling.
Not just that, Al. It's not just the convertible debt. It's for people that actually have bought the stock at trip one and the thing goes up to a penny. they are absolutely selling. If they're a day trader like me,
Oh, right,
let me
absolutely.
I'll give everyone an example. I sat in HYII with 50 million shares, and I sat there for 7 years with that. When that stock started going up, what did I do? I got the hell out. I didn't want to sit another 7 years in that. And that stock got suspended, by the way.
Right, I saw that. That was a good sell, obviously. Somebody asked about hedge funds. Can they do that on the OTC? Again, it's not economically feasible for a hedge fund to do that. It just makes 0 sense. 0 cents. I mean, I can tell you the net capital requirement, even to sell a stock that's a penny, okay, for a brokerage firm is extremely high. Even if you want to sell it. And I know there are those on the phone who know what I'm talking about. So, that's why I said most stocks that are under 1, firms aren't even accepting it anymore because the net capital requirement of the firm, how much money they have to have kind of in reserve to make the trades, it's too high. I think it's 100 to 1, if I'm not mistaken, or something like that. Sarge might say what the number is. So no, hedge funds are not shorting OTC. No one is. I think that Luke makes a great point. That's one of the reasons why the valuations sometimes, majority of the times, make absolutely 0 sense because you can't short it. It can be pumped and hyped and all that kind of stuff to ridiculously high numbers. But that's why it doesn't matter sometimes, the Wild West.
I have a
So
question.
Luke, it sounds like you come from like I do, kind of a fundamental research type, where you're kind of looking at the fundamentals, right? It's really hard to find.
Yeah, I mean, I have a CPA, so that's my background. I'm not a trader.
Right.
I'm trying to be a trader, but I'm not a professional trader, so it's not my bucket.
Yeah, and I
necessarily,
think for somebody like you and me, the ones that make sense then are the ones that they have a much lower market cap, much lower valuation, obviously, very little if any debt, have cash in the bank, have a business plan, and have the ability to put out press. In the OTC, that's probably where you're most comfortable, is my guess. And that's the same thing with me. I'm the same way as you are on that. When people showed me, for example, TSNP, as I'm sure they did to you, and I looked at the valuation, I said, I see it's going up every day, but I can't buy it. Right? That's probably what you said.
Mm-hmm. Yeah, I mean, it's really important to look. I mean, for me at least, I'm looking at those balance sheets and things like that. And when you find one that's got tons of cash and receivables that look like they're going to turn over pretty quickly, I mean, there's your gold mine. But then you start to look at the the valuation, and you just have to know that it's not going to add up necessarily. But I guess it's a blessing and a curse.
Right, exactly, and that's the trade-off, I think, here, right? And you're right on the money with that. I think you're right, where you have to kind of balance it as to, if you want to trade these. Look, people made some big-time money between Thanksgiving and February 1st, right? I think a lot of people are giving that back right now to some degree, but look, there's going to be. So the OTC always has some winners in it. It's just going to be harder to find. So, hopefully, within the discussions that we have within this room, we identify those and we stick with them, and they do what a CLIS did, or what a Strike Force did, SFOR, a couple of months ago, where all of a sudden you get this tremendous amount of volume in it. And then you look at the valuation, like when CLIS, as to your point, Luke, got to what effectively was almost a $200 million valuation for a company that has a trivia website and is starting, and I was like, I'm thinking to myself what you did, which is like, this is ridiculous. Didn't mean it wasn't going to go to $1 billion, right?
Yeah.
But I was like, I've had enough. I'm done.
So it's like going black marlin fishing. It's like you're not going to catch very many, but when you do, it's a hell of a ride. So.
I'm looking at what Alex or Alexi said on HCMC. So I would have to completely and totally disagree with that. I think the outstanding shares and the shares in the float in an awful lot with respect to how a stock can trade. So it's just my opinion that people can feel a little bit differently on that. But I think it's very hard for a company, for investors to move a stock up when it has literally hundreds of billions of shares that have to be moved. But you can disagree, certainly, with that, on that comment. But yeah, so
Al, quick question for you.
So,
Your thoughts on basically buying all OTC stocks in your 401k?
only OTC stocks?
Or a good majority of OTC stocks. It was mentioned yesterday, and I was I was baffled by it, but
I think all right. Again, on the OTC, you have to assume that everything can go to zero. Why do I say that? Because folks like Jim, who just said that, myself and others, we've seen everything go to zero. We've been there and it's happened. Okay, we literally have, and it really is painful. So with that said, I'll just say what I would do. I could never possibly do that. Would I own a piece of my IRA or 401k in an OTC? If I were to trade it, yes. If I thought that it had the potential to be like a KULR and be something that could eventually be on the NASDAQ and be a much higher trading stock one day, yes. But would I personally own them 100%? There's not a chance. There's no way that would happen. I think, when you're looking at those retirement, you have all those years, depending upon your age, you have to really look at the historic performance of, either top quality stocks or ETFs or mutual funds as the basis before you do anything that's speculative. But that's what I would do. So that's the best way I could answer it. Everybody's different.
Yeah, I mean, most 401ks you can't even invest in an OTC market. I mean, a lot.
But
of
I think he was talking about a self-directed IRA, right, Jim?
Oh yeah.
I'm not sure what kind of retirement vehicle it was.
Right, one where you could, if you could.
Well, if you roll it over.
Right, or if you roll it over and you have the ability to do it. Yeah, I mean, and look, when the markets were trading where, this guy would put out a tweet and the stock would go up 30% in 5 minutes, and you want to go in and out in your IRA, I guess I could see a trade, sure. I mean, I did it a couple of times. I will tell you, I did that, but it was for 10 minutes. It wasn't for more than that. I think you have to be real careful. And you have to think, and these are really good questions here.
Yeah, I think that's important, though. I would just add to say that I'm not aware of any professional advisor, financial professional that would ever advise anything close to that. So I would just say, if that is you, just look for an opportunity to sell off quite a big of that chunk, and also recognize that micro caps, but small caps, there's large caps. That's one asset class. I mean, that's equity. And so if you're only in OTCs, you're only in equities, but then you're only in micro caps. And so
most speculative part of the market,
which is the most speculative part of the market, which is just a really dangerous place to be. So
yeah, I agree. I mean, that's why I said I think you have to really ask yourself, what happens if I wake up the next morning, the stock that I have is delisted, it is worthless. You have to ask yourself that question before you buy any OTC stock, okay, or non-SEC filer, I should say. I really think it's a question you need to ask, because everybody goes into these just like you're sitting at a slot machine and you're certain that you're going to hit the jackpot. The truth is, the majority of these, have we shorted them? I'm sure Jim knows what I'm going to say. Have we shorted a lot of those stocks back in 2014? We were retired 3 years later. So,
you're not kidding.
It just, and again, I bring these up. You have to be really selective, and to your point on here, that's what we're trying to do here. I think is to be selective and to look at the filings and so on. I recently challenged the guy on Twitter, as some folks know in here. I'm literally just putting up links to the filings and saying, for those who don't know, here's the filings. Take a look at what's going on prior to investing. And he don't like it, but that's okay. By the way, I know some people asked about AFFU, something that we, some of us have some a position in here. It's slowed to move as some of these are in terms of the news flow, but the company has let it be known. If you take a look at the recent press releases that have come out, it is a company that's in the 5G space, in the infrastructure space. And if you take a look at how they're setting things up and you see the size contracts, in that space and where they're working and try to piece two and two together. That's the hard thing about the OTC, is kind of finding those little diamonds in the rough. I think you'll find this to be a diamond in the rough. You have to just kind of wait for it to happen. In the meantime, notice that on this market pullback, those shares didn't get hurt at all. They're totally unaffected by anything that's going on right now. It's a very unknown, stock. KULR is another one. In fact, it's more towards its high. It's almost at its 52-week high right now because it's not one that's known. It's got great fundamentals and so on. I think it's important to see that, by the way, as you mentioned before, on valuations and stuff like that. The ones that have not really gotten hurt or that have corrected already and you're comfortable with, those are probably your candidates on the OTC that you want to own going forward.
I have a question in regards to KULR. When Insider Financial came out with that news story and it put them in a stock promotion, how is a company liable for stock promotion if they have stated that they are not affiliated, nor did they pay for that article?
Right. So that is a fabulous question, and again, one that I think that Sarge is really on top of, and probably will respond to you better than I will on this. But they can only put out a release stating that they are unaware of anything. However, that does not mean OTC markets won't ding the company and put a bullhorn on there for promotion, even if they don't have that. They can put out the press release to do so, and find out the source of how that happened, and try to make sure it never happens again. But that can happen to anybody because they can't control everything that happens, and that's only what's on OTC markets, from what I see. That's an excellent question, though.
I read that article from Insider Financial before he had to pull it. And there's other articles now that compare them and put them in line with Tesla. But I think that's what dinged, Insider Financial, I believe, got fined for it. But
okay. And that's possible. It's possible. I mean, obviously, it really hasn't had much effect on the stock or the stock price.
Yeah.
But you make an excellent point. It's just sometimes if things are out of control of the company, the only thing they can do is put out a statement that they're totally unaware of it. Look, they're an SEC filer, so and they raised I think it was $6 million not that long ago. So any statement they put out, they sign their name on the dotted line, and it better be true because he's liable for it. So if he says that he doesn't know of any of the promotion, I believe him. Great question, Pam. I mean, it really is. I will also say that back in the day, talking about, all these got dinged for promotion, all of them, because they used to send out email lists all the time. A lot of the convertible debt holders would hire email lists to go out and kind of on unsuspecting people. On those emails saying how great this penny stock, they would be dumping their convertible shares on them. I think because of social media like the Twitter, the Discord rooms, Telegram, and things like that, you don't see that anymore as much. So, I know I don't get any promotional emails anymore. I even remember the days where faxes used to come, and that doesn't really happen. So, it's different. But a great question on promotion.
I've got a question about the whole institutional investors situation regarding GAME and AMC. Just like a theory that because of the amount of interest that they're having to cover with their shorts that are still going on at a high level at the moment, there's just this theory that maybe they are pulling money out of the rest of the stock market, and that's pulling the whole market down, and maybe that's what's causing everybody to start panicking. I'm just wondering what your thoughts are on that.
Well, my personal feeling on GameStop, that whole situation, I don't think it's good for the market at all. I think that long-term investors, serious money managers, look at that and feel like there's something broken out there, and it makes them nervous in general. But that said, I have no doubt that it may have started on Reddit and other things like that, where people thought they could do that. But look, there are algorithms that, none of us can fight. Okay. We cannot fight them in markets. There's no way. And when those algorithms see something in the market like that, and some of the institutions see what's going on, I have no doubt that they piled on. You could see it in the options market, actually, for those that follow the options, where, people were, going out, and as these stocks were breaking certain levels, they were going out and buying short-term call options. And they knew that would force hedging, which would actually force the stock to move up even more. And those are not being done by Robinhood and Reddit investors. Those are being done by institutions and, potentially algorithmic, the institutions that run on algorithms and things like that. I view that kind of as an earthquake that happened with GameStop, to the market, and see the aftershocks of that earthquake. You saw it with Rocket Mortgage yesterday and the day before, right? Where they kind of try to do that. That was more like of an after tremor, though, right? It didn't do. The stock maybe ran from, let's say, 20 to 45. It didn't run from 20 to 500. There were other reasons for that. So hopefully that will dampen its way out. But I do think that the institutions, at the end of the day, were way more responsible than anyone could possibly realize for what happened. Because they picked up on it, and then they took advantage of it.
Sorry, there's a guy on YouTube. I think he's in Stock Market with Bruce, and he's like an old timer, like stock market investor from like the 70s onwards. Lots of experience, and he said that on looking at the short percentage on ETFs that are also connected with Game and AMC, those have also had massive levels of institutional investment, like shorting going on as well. So they're kind of trying to do it from different angles as well. So
it makes sense.
Yeah, and it's just it seems like it's kind of
makes sense.
Well, there was no shares of GameStop available because I was trying to short. I even called my broker.
Yeah, me too. And you couldn't find them.
You couldn't get it.
And by the way, the carrying costs on those were ridiculous also.
But
if you looked at the option premiums, and listen, Jim, if you tried to buy puts there, the option premiums were ridiculous.
I did.
Okay, when the stock was at like 200. I sold the 35 puts and took in $4 or $5. That's ridiculous. The option premiums were completely absurd. So you knew that the system was broken there. But I think hopefully it's kind of like I said, an earthquake one-off. Yeah. But I think some people probably did really well institutionally. But seriously, you had to have your head examined if you were buying the stock at 400. I don't know what else to say on that.
The valuation looked like an OTC stock.
On the rest of the market.
Yeah, very right. There you go. That's right.
Hey,
these are all good questions.
Thank you.
Hey, the stock HDII seems to be bottoming out. Are you still bullish here?
Yeah, I got to tell you, and Sarge knows this one as well, like I do. So this particular Chinese group was involved in SPOM about a year ago, and that stock, had a huge run. And I know a lot of people probably bought it much higher, and of course they're upset that they bought it higher and then the stock went down. But I don't think that they've put a company into there yet. I think that I believe. Look, it's just, and I'm not in contact with management. I don't know. I'm just following based upon what I saw happen at SPOM. And the Chinese New Year just ended a week or so ago. I would expect that they'll get serious and try to do something there now. So I mean, and unfortunately, I noticed that, Alex pumped that a couple of weeks ago, like 4 or 5 weeks ago. And I when that stock went up to like 8 or 9, I sold a piece, and I had said on the board I was selling some of that. But at these prices now, I think we have to watch real closely about what's going on with management right now. And if they throw something in there, it probably, it has the share structure and certainly has the dollars behind it. Okay, but that could possibly be, pick going forward. My cost basis on that one, I think, is 1.5 cents right now. I don't really pay attention to it that often, but right now. But I think that, the answer is yes, because of what happened and where I kind of think it is right now. That could be one of the winners coming out of all this consolidation that's going on right now. And it's one that I think. Symbol? It's HDII. And if you look at SPOM last year, this same management group out of China, did something similar. And one can only speculate about what they're going to throw in there. And I think if I do more digging, and in fact, I'm glad you brought that up. I'll ask some people that might have some indication about when we could expect something, and I'll come back to you on that. That's a good question. I like that one. It's one of the few that I didn't sell at all. When 3 or 4 weeks ago when I saw this, but I had already trimmed a big part of the position because it ran from 1.5 to like 9 cents in a matter of a couple of weeks, and it was just, to me, I thought it was just too much. And when I saw Alex pump it, you got to realize that a lot of his pumps turn into dirt. So, I thought it was a good time to sell some, and I know I posted that because I always post them if I sell them. But I'll get back to you on that HDII. I think right here at these pricing, it's attractive. Jim, we should take a good look at that one.
I'm just trying
I
to
know
look it up.
Sarge will help us with that too.
Did you say HDII?
Yeah.
That's hypertension something diagnostic?
That's it. Yep, that's it. Forget about the name of the company. They're putting something new.
All right.
Go look at the at the corporate actions on it. You'll see. Okay. And then you look at SPOM. Look at the chart from SPOM over the last 18 months, and you'll see why we got interested in this. And to Luke's point, Luke, this is an example that, like, some of the OTCs we look at, right, is you look at a company like that, and you look at the money behind it, and then you think, okay, well, where could they possibly take this to? And where it is right now, it may seem reasonable for an OTC stock, but the hope is, of course, that they're going to take it to where it's unreasonable. It might fit kind of what you're looking for in terms of if you're still on, Luke, about the kind of things that you're interested in. So it's something that I would love to review it with everybody together. Because I love, if we all look at it, I could certainly be missing something when I'm looking at it, or whether it's good or bad. And I certainly would love to hear other opinions, especially Luke, who's the CPA. Would love to hear your opinions on some of the balance sheets we're looking at. Great question on HDII. You have anything else to cover? What was the broker issue on HDII? You can't buy it in Canada?
Yeah, I tried buying that a while ago, and I know I couldn't.
Does it have a CTO on it?
I think it said DTC, if I remember correctly.
Oh yeah, you know what? The company, if it was DTC, the company, whether it's a CTO or a DTC issue, will have to write to resolve the issue if it's a CTO. I know that those can be resolved. They're usually an old legacy issue that the company doesn't even know exists, if it's a CTO. And if it's a DTC issue, that's a little harder. DTC is not as easy to work with. So we should probably find out what that is. And I'm sure we could probably let the current management know that's an issue for the Canadians being able to buy that stock or not.
I have a question and go along with that. So there's been, like, for example, you remember Gossi, right?
Oh yeah, GOSY. I remember that
so
one.
at first I couldn't do that, buy that, just putting in like a regular order. Then I played around, and I think it was, I sent it to MGND through the route, and then it filled like that.
What do you mean MGND? I'm just not familiar with it. Could you explain it to me?
I have no idea, but like, hold on, let me open up my broker. But on my
Right.
page, it gives me like an option for the route. And I think
Are you doing this order out of Canada?
Yeah.
Okay.
Just looking up. Just 1 second. I'm just logging in.
While you're doing that question that Fighting Lion just asked, are you talking about correction phase in the OTC or in the overall market? Okay, so in the OTC, so no, I know this is going to sound like a really weird answer, but the correction phase will be over when the selling stops. And I know that sounds like, oh, that's obvious, but I really mean that. Like, if you look at Galaxy right now, right, the selling that was going on today in the last 4 hours, there was almost no volume on the stock. To me, selling is stopping on that stock right now. That's a good sign. We saw today on GCAN, it seems like the selling is getting exhausted on some of these. When the selling really stops and there's a big bid and it doesn't get hit anymore, it's probably around the right time to go back in. I don't know how else to do it except that it's a feel. Jim, maybe you have another way of doing it, but to me on the OTC, it's more of an art than a science. And I can only do it by the way it feels. And the selling on Galaxy, for example, it feels like it's stopping or it's just about over. And to me, I felt like the GCAN selling at around 1 is effectively almost over. It just feels that way. And you'll know it again by letting it kind of form a base. And I'm seeing that on Galaxy right now. That base is forming, let's say, between 3 and 3.5, 4 in that range. And there is no more dilution there right now. So you should see a kind of the selling stop, and then there'll be a time where there'll be good news. Stock will start going up, and it won't look back. That's kind of when you'll know. So it's more of a feel than anything else, and that's what I see right now on Galaxy, for example. In terms of the way the OTC looks, I think there's a lot of OTC stocks, by the way, that still have a lot further to go, a lot lower. So, but I look at Galaxy and I think that correction is pretty much there right now. Anybody selling below this, given the amount of volume that's been there for the last several weeks, is probably selling at a loss.
Hey, so I just posted a screenshot of like what I was talking about. It's just like at the
Right.
bottom, it gives me a route and like sub route or route to, and it's not saying now because like market's closed obviously, but under the first route, it gives me an option of like auto.
Okay.
Yeah, so auto and MGND I think is the one it's not showing right now, but when I changed Gossi from auto to MGND or whatever, it let me buy, but at first I was getting those like same errors.
That's interesting. So I'm not quite sure why that is. It appears as though you have the ability to route right through a market maker. We don't have that ability here in the United States to do that, unless you're using like a level 3 brokerage, which I think involves, you have to be a trader or something like that. So you can actually route right through, which is interesting. So you probably, and I'm unfamiliar with that particular ticker that was on there. Auto, I remember back in the day. I think they show up right now on the screen as either OTCX, but auto used to be a common market maker in OTC stocks. So all that is you were routing through a particular market maker. It looks like one accepted and one didn't.
Oh, okay. So
Okay,
is auto like a group or is that like fucking? Or
it's a market maker. It's a market maker. You were routing directly. You were
no. Sorry, let me rephrase that to like one specific market maker. Like when I see auto, I'm thinking at first it sounds stupid now, but automatic. I was thinking automatically routing to like whatever.
No, it wasn't. You were routing right to a market maker there, I believe.
Okay.
Auto AUTO used to be, and I don't know if they still are. They may never just changed the ticker up there. I think that they used to be a market maker, AUTO. So it looks to me like you have the ability to route through different market makers, and
Okay.
that's unique. We don't have that ability, and that's what you were doing on there. By the way, somebody talked about that hitting 212 kill Galaxy. So I got to kind of throw that one out and say that to me it's a bullcrap reason for the stock to go down. I hear what people are saying regarding that. That is nothing fundamental at all to do with the company. It's what happened here. The Trading 212 is a brokerage firm out of Europe, I believe. It's very similar to Robinhood, and they stopped buying. They put a halt on buying to several OTC stocks, including Galaxy. and because of it, a lot of people decided they wanted to sell their stock. They couldn't buy it anymore. And I hear what they're saying, but that is something that should have gone through the market in 2 or 3 days. And if that's the reason the stock went down, that's more of a reason, in my opinion, to own the stock, because that has nothing to do with fundamentals or anything like it at all. And if we're still seeing that, it should be out of the market soon. That's my view on that. That's a mechanical event that should have ended already. And anybody that wants to buy it should have found a different forum to buy it from. I guess we're kind of winding down here. Any last questions here? We'll do 5 more minutes.
No one else. I got a quick one.
All right, go ahead.
So it's kind of touching back to where we were before, but like in NSAV's case, I know Matt had the same problem. Like I owned a position probably before the new year, and then I sold it for whatever reason and completely forgot about it. But now we can't buy back in. So what would cause like that to happen?
Where are you? Are you in the United States or in Canada or in Europe? Where are you?
Yeah, Canada. It's just Canada.
So did they put that on a no buy list, or similar to the other ones?
That like I couldn't find any information. Like I didn't really look too hard into it because I was like, "Fuck it, whatever. Can't buy it." But like I saw recently that I owned it and I completely forgot. So now I'm just wondering.
I see.
Like, yeah.
I think probably what happened there is just it got put on a list with a lot of other OTCs where, from a risk point of view, given what happened with Robinhood, some of the firms just decided to put things on a no buy list. Listen, I'm not a fan of that. I think people with self-directed brokerage accounts personally should have the ability to buy and sell what they want. But from the point of view of the risk tolerance of brokerage firm that's allowing you to do it, they have a net capital requirement to meet. We saw that Robinhood had to go raise $3 billion in order to meet their net capital requirements. So they have their own reasons to do it, and I don't think we can really fight that. So I can just say that it's not because the company itself did anything wrong. It's probably because of it is because of the issues involving liability that the brokerage firms have, and that's why they put it on a no-buy list. And you just kind of have to find a different platform if you want to own the stock that you can buy or sell it from. Is my feeling on that. I mean, similar to what they did with GameStop with Robinhood, they would, I think, what was it? Let you buy one share. So I think that's probably what it is. And I'll answer with this one last question here. Was how often does the SC correction happen? So you're talking about with respect to SEC suspending stocks, or with GameStop, as you point out there, it really wasn't the SEC that did anything there, although they were questioned about it by Congress. It was really the brokerage firms that made a decision based upon their liability that they felt. In terms of the OTC, I think what you're saying is the SEC, has the ability to come in and suspend a stock, at will based upon something that's misleading or a non-filing issue, and that is probably going to be very strict with them. I think, if I'm not mistaken, the new administration just hired like 36 new SEC attorneys. If anything, that's going to get even more strict, I think. We just need to be careful about the choices on the OTC that you're there with. But like I said, I think the easy money in the OTC has been made. I think it gets harder, but it doesn't mean that we can't do well. It just means we have to be, as smart as we've been, we got to be even smarter now as we move forward and have a little bit longer time horizon than 10 minutes. Because 10 minutes is all it took back in January. Now it's going to take more than 10 minutes to make, 30% on a trade. It's always been that good. So anyway, listen, I'm going to wrap this up now. I love this. I'm happy to do it again at any other time. once a month works for us, and that kind of makes sense for us to do. If anybody has any questions, just leave them for me, and I'll try to get back to them. I've got a lot of time on my hands right now, kind of unfortunately, so I'm happy to answer them. And Jim, I'd love is the other gentleman. Sorry, I'm just brain dead right now. I forgot his name real quick. Who's on the phone? Who's the CPA? Is he still on? And I'll find out who that was. But I'd love
No, he got off a little bit ago.
Right. I'd like to chat with him also. But listen, Pam, thanks for setting this all up. Great. And anything else that, any other questions, feel free. If anybody wants to jump on at any given time and has a quick question after the market closes, just say, hey, listen, I got a quick question. We can open up the line. If Tiger says it's okay, and we can answer them, assuming that some of us have the time. There's several people that are on here, not just myself, as you heard today, who have a lot of experience. This is one person's opinion. Please remember that. And for all that, I hope everybody has a good day and a good week, and hopefully all this correction stuff ends pretty soon and we can move forward. Take care, everyone.